how to read institutional order flow. Now, I know everyone has their own style with regards to how they actually read order flow. I feel like there is quite a bit online about using this array, that array, using sort of this concept, that concept. I'm going to show you my approach, which obviously I think is the best approach. And I'd say one of the easiest approaches. There's a couple points in here as well I feel like people don't actually regard when they look at institutional order flow, like correlating assets. What we're going to do, we're going to do half of it on the whiteboard, and then we're going to go ahead into the charts and break it down there. So just to brief you, first of all, right, when I'm talking about institutional order flow, I'm predominantly gauging institutional order flow using liquidity. Okay, ignore my writing. Liquidity and fair value gaps, right? That's number one, right? That's really important. Now I'm going to basically break down three different sort of tools or I guess parts of the video that I think are relevant to gauging order flow. So number one, right, is buy and sell programs. Now I know I briefly talked about this idea in the previous video, and that's actually why I'm breaking this down for you guys, is because I'd mentioned that I was going to basically include this in the next video, but I'm going to go a little bit more in depth. So pretty much a buy program is when, okay, the two conditions have to be met. Price is making higher highs, okay, and higher lows, but also on top of that, bullish arrays are being respected, right? So when I said we're going to gauge order flow, we're gauging it through one, fair value gaps, and two, liquidity, right? Another point to this is anytime we run out a old sort of swing low, price should act aggressively underneath and go higher, okay? And that should answer all you guys' questions around the whole, when is it a turtle soup and when is it a market structure shift? But again, I'll actually cover that in another video in a bit more in depth. So again, buy program, higher highs, higher lows, respecting bullish arrays, underneath old lows, turtle soup, okay? Now we have the same for the sell program. In the sell program, we're going to be making lower lows and lower highs. We're going to be respecting bearish arrays in the form of FVGs, and any run above a short-term high is often going to be a turtle soup. Okay, so that's buy and sell programs. Now there's one other key point that is super important, and it's actually what occurs in the opposing arrays in each side of each program. So what do I mean by that? Well, in the left hand side, right, bearish arrays, how should I draw this? I just talk about it. So with bearish arrays, right, bearish arrays in a buy program should act as inversion gaps. So let's say we had a bearish FVG here. This, okay, should be used by price on the buy side of the curve to accelerate price to the upside. Same with this, old bullish arrays should be closed through and inverted, being used as bearish arrays. Okay, so the reason why we like to use buy and sell programs over structure is covered in the previous video. You can go ahead and watch that. So number one, buy and sell programs. Okay, number two, we're going to look at the CSD, right? Or CISD, as some people call it. It's pretty much just a change in state of delivery. Now, I get a lot of questions about this inside of my reels, so let's talk about it. So change in state of delivery basically denotes the shift from buy program to sell program. Okay, now a CSD typically needs to be coupled with some sort of liquidity. So for example, we have liquidity up here. Price needs to actually go ahead, raid that liquidity, and then that's often what's going to cause that shift in program. You can't just sort of go on sort of the M1 or H4, H1, any time frame and just anticipate sort of price to turn around. It doesn't really make sense. It needs to have some sort of catalyst in the form of FEG, liquidity, that sort of thing to actually denote shift. Now, there's two ways that shift can be displayed or occur. One is through an order block formation. So typically, bullish arrays in a buy program should be holding, right? Now, once that gets broken and this sort of bullish array that should have held, quote unquote, gets broken, that denotes the shift from a buy program to a sell program. And that's basically what a change in state of delivery actually is. It's the shift from a buy to a sell program, but also vice versa, from a sell to a buy program. Okay, so like I said, typically it's denoted by two ways. It's one, through the formation of a new order block. So like this will be a long bullish candle here. It will get closed through, and then that will get used on the other side. Okay, that's number one. But number two, okay, and this is my lesser favorite change in state, but it can definitely happen when we get a move above an FEG, right, and we start to actually invert an array. That will often show us the shift from a bullish state, or sorry, in this case, from a bearish state to a bullish state. So you can have a change in state delivery via an FEG or an order block. Okay, and that's something that I feel like a lot of people miss is the I. So technically, it would be an IFEG. A lot of the times, you can get that change in state of delivery through an IFEG instead of waiting for that order block, because sometimes there'll be like an FEG up here, for example, that will get inverted, and we have really clean equal lows here. And as a really easy draw, you can wait for this level to get inverted, wait for a price to retrace back in, and then go and attack those lows. Okay, let's get rid of that. So we have one final point, and this one I don't see anyone talking about. And this, it's more than SMT, right? I'm going to write SMT, but I'm going to write / correlated assets. Okay, it's more than SMT, but I will explain SMT first. So what do I mean by SMT, and why do we need it to gauge order flow? Well, SMT is basically that sort of that crack in correlation, and that, let me just draw it. Okay, it's sort of the uncorrelation of assets in a way. SMT, and I'll be real, I'm assuming most people know what SMT is because you're coming to my reels. I mean, I'm talking about this stuff in pretty much every reel, right? But SMT, just as a very, very, very brief overview, is the cracking correlation between assets, typically showing that smart money is accumulating one of these assets. Okay, typically it's the weaker one, yeah, because the logic is that this price, or sorry, this chart has had the ability to raise so high, whereas smart money has been aggressively shorting this, therefore it hasn't been able to push as high as, but pretty much the logic. But how does this work in terms of institutional order flow? Now, of course, right, when we're inside of a higher time frame P array, when we have SMT coupled with that, it's pretty much a done deal. Okay, when you see SMT inside of that higher time frame P array, a lot of the time this is going to be that failure swing, and you're going to get such a strong sell-off from there. Now, in terms of like a CSD and whatnot, this is quite important. At the top of a market maker sell model, okay, so basically this, right? Here at the smart money reversal, is very often you'll get some sort of SMT between correlating assets. So that's one, right? Why I'm talking about that is because when you're gauging institutional order flow, where this one you might be thinking, oh well, why did we not go ahead and reach this high, right? Or there might not be an FEG here. A lot of the times when you go over to a correlating asset, it's going to actually answer the question for you. Okay, so like for example, a lot of guys will say that our price hit the rejection block here, okay, and price drops, right? But a lot of the time, this is just SMT between a correlating asset, and you could have just gone on the other asset and realized that it was a turtle soup, and on the other asset it wasn't. And so therefore you don't really need to even include the idea of the rejection block in there, as it just overcomplicates things for no reason. Okay, so one is with the SMT in terms of when you're actually taking an entry, but the other way I like to use it is when you're actually going ahead and taking profit. Okay, so this is heavily overlooked, but this is literally like one of my must-haves in terms of a profit target, and sort of my take profit protocol. So as you can see, right, on one of these assets, we've gone ahead and reached for liquidity. Now, just a sort of a quick lesson in this, right? When we're in that sell program, the only things that are going to turn price around is fair value or liquidity. Yeah. But one key thing that people mainly miss out is once the liquidity has been met on a correlating asset, price can actually go ahead, right? So let's say this is DXY, and this is EU, right? Once price has gone ahead, reached for, okay, the liquidity on a correlating asset, this can actually go ahead and disrupt the order flow of the correlating asset, even though it hasn't gone ahead and reached for the corresponding draw on liquidity. Okay, I'll say it again. So pretty much Euro USD has gone ahead and reached for the low, yeah, but DXY hadn't reached it yet. Now, like I said, in a sell program, right, every bearish array should hold, and we should just keep navigating its way to the downside. However, once one of the correlating assets has taken out the liquidity target, without taking out this target, price can actually disrupt the sell program and break. And that's why a lot of people get confused and they'll say, oh, well, price left equal lows. Why did it do that? Well, if you go onto the correlating asset, you'll literally find a lot of the time that the correlating asset had gone ahead and breached the low, but on the asset that you're looking at, it hadn't. Okay, and that's why when on a correlating asset, we've hit the draw, let's say I'm in this one, right, I'm trading this one, I will have to take profit at the point where EU hit, let's say, the draw. Because, like I said, the order flow may then break and you don't actually know if we're going to continue, and we actually have the ability, like I said, to break out that order flow. Yeah. So that last point is, in my opinion, very, very, very key. It's heavily overlooked, and it's not something that really many people actually talk about. So let's hop onto the chart. I'm going to go over a trade that I took on ES, and yeah, I'll see you there.
Okay, welcome back to the charts. Here's a little review on a trade that I took last week on ES. Yeah, let's get straight into it. So first of all, why was I looking to buy ES over NQ? Well, we can clearly see we have SMT at the bottom there. Yeah, so between NQ, you can tell how we actually went ahead and purged that low, whereas ES was way stronger. Right, we didn't even get anywhere near that low at all. Yeah, and also you can see that why we ended up buying ES, and you can actually tell, but after this SMT had occurred, how much more aggressively we move in comparison to NQ. So you can see the move higher was of that magnitude. On ES, we're way closer to that high. So it was clearly even proved, right, that with this SMT, ES was going to be the stronger pair, right? Now I'm going to mark on this weekly FVG as that's sort of the valid array inside of price here. Let's jump to the daily. Now on the daily, we can clearly see that we're in a buy program. Okay, and why is that? Well, we denote that via the shift, change state of delivery, and essentially the continuation of bullish order flow. So you can see here we're in that sell program. Whether you wanted to say this was the change state of delivery or you wanted to pick some specific order block, it doesn't really matter. But we understand at this point in time that price has switched from that sell program to the buy program. Okay, then inside of here we form a swing low, and like I said, when we're in a buy program, we want to see old lows being used as turtle soups to drive price to the upside. So if you actually also look at this low, it was accompanied with a higher time frame P array. So this makes this low even more likely to be a turtle soup to propel us to the upside. Now the drawn liquidity, so sorry, the day that I actually took this trade was on this Thursday, and my drawn liquidity was these equal highs here. So let's investigate this a little bit more on the intraday. So let's mark up these highs. I'm just going to put it at this one, but I'm just going to drag it out. So you guys already know I don't like to take trades at the bottom here. However, once that idea is validated, then I like to catch the either first stage or second stage accumulation to the upside. All right, and that's exactly what we did here. So we have, again, even on this time frame, the 4 hour, you can notice the shift. Even on, again, 1 hour, 4 hour, that shift from sell program to buy program. And the 1 hour, it shows it really nicely here. You can see it by the formation of this order block here. You can also tell via this FEG. Now, in this example, right, and what I say to most people is it's very good if you can couple the daily with the intraday order flow, right? That could be in your plan, and that could be sort of your rule set to say, all right, cool, when the daily is aligned with the H1/H4, I can actually go ahead and take a trade. And in this case, you'd be able to validate that. Okay, so we had bearish order flow, switch bullish, daily's bullish, H1's bullish, and we also have a easy and clear drawn liquidity, right? On the hourly then, I might post these screenshots, but I have basically me breaking down price at these levels and whatnot. I probably won't post them, but whatever. So we filled this FEG. If I can grab that. And we started rejecting away from it. Now I will show you the key time and why it's relevant inside of here. But pretty much, I was confident in the move up. We have the equal highs. Once this FEG has been filled and we're showing aggression away from it, in my head, there's no real reason for us to need to trade any lower. Okay. We also do have this breaker and this FEG, so that in a way is like a unicorn setup. I wouldn't personally go ahead and execute on that because you have your stop somewhere. I mean, I know people will have it in different places, but for me at least, I would have to have it quite low, and the risk to reward's not really worth it. So let's break this down in terms of the sessions now. So we have Asia, London, and then AM session. So this is basically one of my daily cycles. I won't go crazy in depth with that, but pretty much inside of a buy program, right, at key time of day, especially at the start of a session, if we get a turtle soup, it's extremely likely, okay, that we're going to go ahead and run. You can see, look, when I really jot out the kill zones like this, you can literally see the power of AM session. Yeah, like what does it do every single time? Sweep, go, etc, etc. Obviously not every single time, but that's literally, I've shown you probably the last 5 sessions, and at least 3 of them do it. So we sweep this low out during key time of day. I allow that 9:30 opening to happen first, right? In UK time it's 2:30, but this is the sort of 9:30 equities open that most people are aware of. So I've identified, like I said, we're on the buy program. We've gone and done a turtle soup at key time of day. Couple other points, right? What I like to have behind me is some sort of power of 3, whether it be daily H4 and H1. And I already sort of showed you that the daily had a good or chance of attacking these highs, but there's certain sort of rule sets that I need in place for me to actually take the trade, right? So in this case, I ended up using the idea of a H1 power of 3, right, on this specific candle here. Yeah, so that's that 3 o'clock candle, which is basically 10 a.m. Eastern Standard Time. So we have the order block, right? But this is the other key point. Remember, when we're in a buy program, we should use old bullish arrays as support for our trades. So in this case, once this got closed through, then essentially what I wanted to see this following hour do was retrace back into this inversion gap / order block combo, and then run to a clear draw on liquidity. Okay, and you can see even on the 15-minute as well, we have a nice 15-minute order block here too. If we go down on the 5-minute, that's where I entered. We have a beautiful market structure shift above this high here. I'll get memory loss. There you go. I'm going to take the sessions off now as they're not that key. And I entered inside of this 5-minute FEG. All right, again, very simple trade. You can just see, look, it's all about the fundamentals at the end of the day. And I had my trade run to a, it was about a 2R, right, roughly. Nothing crazy, just in and out of the market. Very, very sweet, very, very nice. It was fairly close to SL, I will give it that. I could have given it a little bit more breathing room. And again, these are all just things that I've documented inside, but my SL was perfect in this case. So again, simple market structure shift, M5 FEG. And this is why I say the entry is actually not that important at all. Like, you don't need to overthink the entry. Once everything's behind you, you have all the higher time frame framework, the entry is just finding somewhere to just enter and have a good stop. That's really all the utility of the entry does. Sometimes the entry can validate the idea, right? Sometimes, right? But majority of the time, the entry is just to get behind the trade, okay? So, yeah, like I said, I feel like we have included all those different ideas in this. Actually, there's one last thing. So, you see these equal highs, yeah? They go ahead and get reached for at 15:30, so 3:30, right? If I go to NQ now, right, the same equal highs were these. And you can see, look at that. Right, we don't even go ahead and breach them at all. Right, we actually go ahead and create even more equal highs. So this is where smart money guys will get really confused. They'll be like, oh, well, I was trying to long from this on NQ, and I was trying to reach for these equal highs. But the problem is on ES, we've already gone ahead and reached them. So when you're going ahead and trying to catch that sort of last move, and you're thinking you're in that second stage distribution on NQ, you're actually getting the wrong end of the stick, because ES has already gone and reached those equal highs, which means it almost looks like NQ's reversed from nothing. But what's actually happened is, in a way, NQ has had SMT here and then retraced back down. Yeah, and that's all basically that's happened here. On this sort of example, we're on side, right? So we're in the stronger asset, and that's why we didn't need to worry about it too much. But if you were the guy trying to long NQ on this specific day, you may have understood, or it might have been clear why maybe you got stopped out of thinking that when this was retracing here, you were going to get in and potentially run up these equal highs. Yeah. So I hope you guys have found all those tips insightful. I really think there's some really key ideas in there that will stop you from taking a ton of L's. If you guys did learn a lot from this video, drop down in the comments what you did learn. I always reply to the comments, and I'll be intrigued to know sort of what you guys got out of this entire thing. So yeah, hope you guys enjoyed the video, and I'll chat to you on the next one.